Okay, hello traders and welcome to our market update video. It's Stu Napan here, founder of Master the Markets Illiterates Conference and the Traders Open Day. So today's topic is going to be on Think Cumulative. Okay, so what is this all about? Now let's go and take a look at first what is thinking cumulative mean? You see, first of all, cumulative basically refers to not thinking just of one trade or just 5 trades or even 10 trades or 100 trades or even what you did last week or yesterday or even last month. Okay, cumulative, we are talking about at least over 3 years or 5 years minimum. Okay, how is your strategy performing even in historical, even in forward testing, and going beyond in its sustainability? That's what we first mean by thinking cumulative. Second thing is, some of you may ask, okay, Tiru, but why? Why do we need to think cumulative? Now, as most of you know who've been trading for quite some time, you know that usually strategies begin off, usually, let's say, they begin off a little bit positive, okay, and you're getting a good, nice equity run. Or some of you might in the beginning already might suffer some drawdowns, which is already going negative down, right? And then you might start to question the strategy. Is it going to work? Is it going to sustain? Am I going to pull out of this? Am I going to get to my positive profits or not? And so many other questions will stem up in your mind. So when you think cumulative, and if you got your data to back you up on why your strategy should be sustainable, scalable, and reproducible, then you will have the confidence to pull through any drawdowns that happen in the middle or in the beginning or later on, or even any positive returns that happen in the beginning, not to get too overconfident about them. Okay, so that's the second thing, why think cumulative. Now, thirdly, then you may ask, okay, how can I use all of this to my benefit? You see, there's a couple of ways actually. Now, here's some smart things that you can do, which I've read on a couple of other books from other professional traders, and I'll share this with you at the moment. So, for example, from your historical testing, if you have found that, let's say, over 10 years, let's say, you see that your strategy performs in this manner, okay, your route to profit, as I mentioned in my previous videos as well. So what you can actually do, if you want to be smart about it, measure the peak to valley drawdown, or measure usually how many drawdowns or consecutive losses it has got. And after it has done that, let's say, for example, let me give you an example. So for example, this has got a drawdown of, let's say, minus 4%, okay, or minus 14% or whatsoever. So what you do is that you don't put your cash, or you don't start to cash trade it until it does this big peak to valley drawdown. Then after it's done the minus 14% or minus 4% or whatsoever, then you start to come in and put your cash into the strategy. Okay, so there's to write this up equity curve in the beginning itself. Okay, so that's one way of doing it. Another way also is, rather than measuring a peak to valley drawdown, you can also measure the maximum loss cluster as well, trade by trade. So if you find out that 8 trades are the maximum that you can lose, wait for 8 trades to lose first and then start to enter in. Okay, so this can all help to smoothen your curve. Also, another thing that you can also do is that if your strategies are a bit more longer term, what you can also do is wait for compression cycles. That means cycles that would have made you loss, which are reflected on your equity curve anyway. Wait for them to pass by and then put your cash in after 2 or 3 consecutive losses has happened to ride the bigger wave after that, because usually after those compression cycles you will get an outburst of a solid trend moving upwards or downwards, whichever one that you want to capture. Okay, so that's the thing what I wanted to share with you on think cumulative, because this is a big mistake that traders do. Usually they just get excited about what they did, yesterday or last week or last month. And one story I would like to share with you as well, even if you compare hedge funds as well. Some hedge funds, when they started, do remember that even in their first year, even after all of the research and testing and everything, on the first year itself, I know some hedge funds have made a loss of minus 30%. But of course, they stuck to their guns because they know that the testing and the research will work through, and they pull out of the drawdown. And in the second, third year itself, on an average, they start to make 15% profit. Okay, so this is what I just want to let you know, that think cumulative. Even hedge funds go through that as well. So know that you're here for the long run. Don't just think about just today, this month, or next month. Just understand the whole game. Feel confident. Understand why your strategy must sustain, scale, and reproduce, and then you trade with conviction. And this is what we do here at Master the Markets. Not only do we have strategies that we show you as examples that you can use, but also give you the principles that you can go ahead and also design your own strategies that you will feel more resonated with as well. So then you got a mixture of choices, whether you can follow the professionals or you can build your own one that you can just trade by yourself, that you know fully inside out. Okay? Great. That's what we are here for. That's what we usually do here at Master the Markets, and that's on the topic of today of think cumulative. Okay. So first we went through what is cumulative, then we went through why think cumulative. You saw the reasons and how we can use it in real time. Okay. You see, over here, we are always passionate about delivering the truth to you, and this is why we give you all these thinking concepts for you to think on as well. Right, so market watch today. Let's go through the markets. Let's see what is happening today. You can see dollar Swiss at the moment, top to bottom move, still a bit more open equity to the bottom side. The levels what we'll be looking at, I can see a little bit of consolidation here. If it takes out this high, a bit more move to the upside, bottom might be confirmed. If it takes out this low, then more move to the downside. Dollar yen, on the other hand, strong down here. Still a top to bottom move. This bottom hasn't been confirmed. Okay, hasn't been confirmed. So we are having a continuation. Will it take out this bottom or not is what we need to be careful of. First level of more weakness will be this level here. If it does take out that, highly probably it will take out that too. So I'll be wary of that. I wouldn't take any positions at the moment because it's in a bit of a confusion state, but I'll definitely start to look at once it takes out this low over here. Cable, on the other hand, you can see most critical levels over here is this low being taken out to the bottom side, but at the moment bottom to top, first interruption, this level to be taken out. I see high probability for that to be taken out at the moment. Before that's taken out, this high very nearby as well. Okay, so we'll look at all of that. Euro dollar, on the other hand, uptrend, bottom to top, open equity more to the upside. Aussie dollar, yes, you can see that a strong bullish bar today. What move is this? Still a top to bottom. Bottom hasn't confirmed yet. Levels that we will be looking at once this bar closes, a level to go on the high over there, or a level on the high over there is what we will be looking at. Okay, right. So for you to continue on is bottom to top if the bottom confirms. Okay, but however, if the low, if the there's more side to the bottom, then this level first to be taken out, and then second level here. But I would say highly probably looking like a continuation move to take out this high and then to go up further. So let's wait and see on that. GBP Yen, what are we having at the moment? Top to bottom over here is what we're having. I would say still more equity to the bottom side. Bitcoin still very strong, bullish run, 18,268, going really strong to $20,000 over here. I would still say there's still a lot of move to the upside. I mean, it's just not showing reduced momentum. So we have to wait. If anything, if we were to show any reduced momentum, still to take out the low over here, which is not really doing at the moment. Brent oil, on the other hand, uptrend again, traders. Over here, as you can see, still top to bottom move. I would say still the open equity to the bottom side, but it's showing a little bit more momentum to the upside. All green bars here. If it does take out this level, more strength to the upside is what I would say. First level to take out again would be this level here. Is what we are seeing. So let's be wary on that for the bottom to confirm. Gold moving a bit more further down. 1867. Is there more equity to the downside? Yes, I would say so. Just one bar to distinguished top to bottom move over here. So I'll say more move to the bottom side. On the other hand, FTSE as well, very strong bullish move to the upside. Still not showing any sign of weakness, but definitely the first sign of level to take out would be 6290 is what I would be taking a look at. Okay, for the top to be uh, confirmed. Now over here, yes, you can see that Dow has just crossed the 30,000 level as well, if I'm not wrong. 29,996, it still hasn't crossed the 30,000 level. If it does go further down below this level, then equity to the downside. I'll still look for some equity to the downside, open equity to the downside. S&P very similar as well. Silver still stabilizing around $24, quite strong. You can see, but however, if it does take out this level, it's more open equity to the downside, what I would say, or else this level here that we are taking a look at. So it's in a bit of a consolidation, as if you may. These are the two levels that I'll be looking at. If it does take out this level, more highly probably the top will be confirmed. And if it does take out that level, first level to take out for upside would be this one over here. Okay, so those are the ones that we'll be looking at. Right, and then finally wheat is what we're looking at. Still top to bottom move. I would say a bit more open equity to the upside, bottom to be confirmed highly probably. Wait for this level to be taken out. If it does go to the bottom, this level to be taken out over here. Okay, great. Traders, I think that's pretty much that on the market update. Now let's move on. Let's see. Let's move on to our performance for this week. So as you can see over here, let me just write it all down for you guys. On the live trading room, on our liftoff, a bit of a liftoff 70% OE. We've got a very small, tiny loss of minus 0.13%. And then in terms of cash in TSL primary, we got minus 1%. And then in our 1 day exit on cash in, we got minus 1.32%. Okay, so overall, what we have is minus 2.45% on the live trading room. And then in terms of the elite room, we have the primary runners open equity. And what do we have on that? Minus 2.75%. And then primary runners elite, we've got uh, minus 0.28%, very small loss over there. So overall, minus 3.03%. Above the two rooms, a bit of a drawdown for this month, for this week, minus 5.48% is what we got across both the rooms. Okay. Right, so that's what we have. But do remember, always know your strategies, know what the drawdowns mean, what your maximum drawdown is, and how you're going to pull out of it as well. Okay, it's all about patience, consistency, and the law of numbers. Think cumulative, traders. Think cumulative. All right, so that's all from me from on this market update video. As we always say, till the next time, stay disciplined, follow your trading plan, and keep trading like a master.